Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Thursday morning pre-market webcast. Okay, so, let's talk about the last 3 days as kind of a collective. We went into Election Day with a walk-up, and that walk-up got sold a little bit. And as it became more and more evident Tuesday night that the president was going to get reelected, when they called Colorado, which made it numerically impossible for Romney to win, even if he did take Florida, Virginia, and Ohio, and whatever else was left on the table. If he took them all, he still wouldn't have 270. At that point, the market went into what I was talking about on Monday, Tuesday morning, which was a short squeeze. They squeezed it up to 31. They tried to take the middle band back, but it just didn't hold. And what we saw yesterday was the same thing that we saw the first time that he got elected. We saw a big down day. And I've heard every excuse in the book about why we went down yesterday, but the reality is it's a referendum on 4 more years of this president. It happened the first time around, and it's happening now. And, the market, is it any surprise to anybody that the capital markets would rather have not had this president in office for 4 more years? I mean, it's just, and whether we see further downward action remains to be seen. But here's what I do know. We came down yesterday and we punched the lower Bollinger Band slightly. We're seeing barely a little bit of a bounce today. But my main concern now is for 12 days, these 12 days, the 100-day exponential moving average on ES down what is now 1403.5 acted as support. We dipped below it a little bit, but it for all intents and purposes it held. It broke badly yesterday. It did not hold. I put out in the IM Pro room early on. There was some suggestion that we would bounce, in that area because we had bounced in that area before, and I said, look, not today. I was a lot more eloquent than that, but not today. And we've had the lower Bollinger Band, 20 handles underneath, and it was, it worked out well for a lot of people, and I'm thrilled. But just be careful here, because now you've got 1403 overhead as resistance, and it should prove to be very, very tough resistance at 1403. To complicate that, if you're a bull, right now we have triple pivots in the same area. 1401.83 is daily, 3-day, and 9-day, and you can check those out on the Topstep website. They're there on the front page of the website. So triple pivots at 1402, 100-day exponential moving average 1403.5, and you've also got some key fib levels in there as well. So if we rally today, if we do, say, 10 handles from here, I would expect that rally to stall and be fadeable at 1403. And then the real question becomes, after the fade at 1403, do we break below 1384 and make new lows? If we do, I think that the thing I've been talking about for a couple of months now, the touching of the 200-day exponential moving average here at 1373 is absolutely on the table if we break 1384. You're only talking about another 10 handles. So that's what I'm looking for today. Everybody have a fantastic day. Mike Vacchi, Princeton Trader from Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade them well, everybody.